Well, this Wednesday, we reached the halfway point of 2026, 6 months down, six to go. So, how's Austin's market holding up in 2026 as we approach the July 4th holiday? And more importantly, what can we expect in the coming months as we start the second half of the year? Well, let's take a deeper dive. Well, wanted to start with a few quick articles just to show you some headlines that are highlighting trends this year. So, the Austin housing market rebounds with a boost in new home sales, and this just came out last week. What they're talking about is new construction sales. We're seeing a little more push there from buyers. Not a surprise, obviously, as long as rates are a lever that builders can use to push buyers into new homes by buying down that rate. We're seeing some good activity in new home sales, but more importantly, the builders didn't stop. Unlike the housing crisis of 2008, builders didn't stop building. Right? They might have slowed down a little to allow some of this oversupply to catch up, but they didn't stop. And so builders continue to, unveil new subdivisions and build new homes. And so they know long term Austin is growing, and they want to make sure they don't, create an imbalance the other way around if they were to stop building. So that's a good sign. And also, we're seeing rental demand still strong in the market. This is different from how much you can charge in rent. What happened over the last, especially 5 years, and I've mentioned this numerous times, is that Austin built a wave of new apartment complexes. I think we added 15 or 20% more supply to the market in just 3 or 4 years in new apartments. It was over 100,000 new apartment units. Well, they're all empty when you build a new apartment complex, and it's on top of all the rentals that the market already has. And so it takes a minute to have, even if everybody is moving here, that's like 3 years of population growth to fill up these apartments. Well, they're filling up. So what they're saying is the fundamentals are good. These apartments are getting rented. The rental deals are starting to tighten up or go away. In other words, 2 or 3 months of free rent. So what we're seeing is finally the fundamentals in the housing market are starting to get a little more stable again. And over time, as those apartments fill up and rental demand gets tighter, what's going to happen is rents will start to improve. You'll start to see rents go up. And if housing stays relatively flat on price, you might see a swing back into some more people, especially first-time home buyers, coming back into the market. What I really wanted to show you are these charts. This is the 5-year trends. Texas National Title puts these together. I always like their charts. So we're going to look at what's happening in the first half of this year in charts. So this is May data. We don't have June yet because June is not closed. We'll have that data next month, and I'll share that with you. But this gives you a sign of how things are trending, and more importantly, what we can expect the second half of the year. This is number of sales for the metro. And look at the bell curve every year. When do we peak out? In May. Okay, well, remember, it's June. Okay, so next month we'll get data about this area, and then after July we'll get data about this area. Well, look what happens with the number of sales, right? The number of sales peak in May. This isn't about price. This is about number of sales. So your spring buyers, kind of come out in waves, peak in May because they want to buy a home for the summer, and then it starts to taper off as we get into the summer and the fall. But if you look at this chart, the red line is this year. Green is last year, and orange is 2024. Well, we're above the last 2 years in sales. It's not amazing. It's not crazy, but we are noticeably above by 200 or 300 sales over the last few years. So I like to see that. Number of sales has gone up. This is sales volume. This is if you added all the price of the homes together, again, over the last 2 years. So we're seeing some improvement there. This is the big chart. This is the one everybody talks about when you think about price. Median sales price. You can see the big COVID bubble, the big camel hump with the blue line. We are the red line down here. The median price, the average home in the market is still a little bit below last year, but these lines are starting to tighten up. Okay. So what we're really going to be paying attention to over the next 6 months is, does this red line get closer and closer to the green line? Or does it even cross the green line? That would tell me that on price, the market is really starting to find its footing and is bottoming out. If it continues to kind of drift lower than that green line, we haven't quite gotten there yet. But median price, we're within like 5K of where we were last year. It feels, and because sales are up, the market feels better. The price hasn't improved, but the number of sales has. So that is something to watch there. And again, average sales price, once you add all the homes up together, is a little bit above last year and approaching 2024. That tells you the little higher priced homes might be selling a little better than maybe the starter homes are doing. Total listings. And again, you might not even be able to see this on this video, especially if you're watching it on your phone. But the red line is this year. This is listings, how many sales are on the market at any one time. It's finally dipped for the first time in 5 years below the year before. And so the green line was last year, orange was 2024. And so we're finally seeing, maybe the peak of supply is starting to trend back down a little bit. I talked about that last week, and we're seeing it here in the charts as well. Months of inventory does the exact same thing, right? When the number of listings comes down a little bit, so does the inventory, especially if the pace of sales goes up. And so we're seeing months of inventory come down a little bit as well. That's a good sign. These are the first time we've seen this really in the last 5 years. All right, well, that was Metro. Now we're going to break it down into Williamson, Travis, and Hays. All right, so I'll go through these a little faster, but Williamson County number of sales, we're up with 2022. We're peaking right up there. So there's 1,100 sales is doing pretty good. So Williamson County, in terms of activity, is doing fine. Sales volume above the last 2 years. If we look at median sales price, this is where you see the disconnect. The price got cheaper. And so what's happening is you have more sales. Why? Because the pricing is cheaper. It's getting more people to buy. And so Williamson County, pretty noticeable difference, about 25 grand off last year. That does not mean every property dropped 25 grand, but as an aggregate, the median priced home in Williamson County, there's also a lot of new construction up there. We're seeing the prices continue to soften in Williamson County, but because of that, activity is picking up. So that is going to help Williamson County at some point soon find a bottom. Okay. Same with average sales price. Again, that tells me when the line is lower, that tells me again, what's buying in Williamson County? The starter homes. The cheaper buyers are the ones really pulling the trigger there and driving that number down. Total listings, though, neck and neck with last year. They're not quite maybe as good as the whole metro because they're still building a lot, but you're seeing it at least not above last year. It's coming back in line with last year, and months of inventory, a little drop from last year. All right, here's Travis County. This is the main metro with Austin. Again, if we look at number of home sales, it's above the last 2 years. And Travis County doesn't have quite as much new construction. It's a little more established, but we're seeing number of home sales up, sales volume up over the last 2 years. Median sales price, here's where you see a difference. Remember, Williamson County had come down, but in Travis County, we're back to 2024 on median price. We're above 2023 and we're above 2025. And so anyways, we've seen Travis County, maybe because it's more established, you're starting to see, because the price came down, people coming back into the city, starting to find those deals. And I think Travis County feels like it's turned a corner, maybe a little more than the suburbs. So I thought that was interesting. Again, we'll have to watch this through the rest of the year. Average sales price, again, up. And of course, Travis County, you're going to have more luxury, right? This is where the luxury homes are. You're in the city, Lake Austin, Lakeway, all those areas in Travis County. One more thing I wanted to point out. If you are selling your home, before I move on to Hays County, look at where price peaks every year. Again, peaks kind of in this May, June window, and then it doesn't come down aggressively, but it softens. So the price, the sales, because buyer activity softens, generally the price is on this glide path now, between now and the end of the year. May have a little upswing at the end of the year. Those kind of end of the year buyers, that timeline starts to compress and they make offers. So if you're selling your house right now, just be prepared. You're going to have a little less activity in the summer than the people in the spring. And the price has probably already peaked for 2026. All right. And months of inventory in Travis County, we're seeing that noticeably below last year. So Travis County, probably the healthiest of this group. Number of home sales in Hays County, not quite as strong, but we are seeing it neck and neck with 2023 and above 2022, but below the last 2 years. So Hays County's come down a little bit on number of home sales, sales volume below the last 2 years. So that's different. Median sales price, pretty tight with last year, maybe a little bit below, but it's starting to trend in line, I think, with last year. And look what happened at the end of the year. We actually saw the median price in Hays County go up a little bit. So we might be seeing Hays County again starting to go sideways. Average sales price above the last 2 years. They're not quite done with the peak of inventory. So they're still trending right now above last year. So that's what we're seeing in all three counties. A little bit different story, right? Travis County might be starting to improve, may have already found a bottom. Williamson County continues to get a lot of buyers, but at a lower price. Hays County is kind of a mixed story. So pay attention to that. If we look in real time, this is May data. We'll get to the June data here in a second. But as of May, we were sitting about 4.8 months of inventory. That's a pretty normal market. It really is. It's going to feel soft as a seller, but it's a pretty normal market. Supply still well above the 10-year average, but starting to tighten up as we talked about just a little bit. And we're seeing the demand up. That's the general story. Supply finally starting to drop a little bit over the last few years. Demand up a little bit over the last few years. That's where we're starting to see the market turn. This is a chart that shows original price versus sold price. What does this mean? Well, you're going to have a list price. That is your original price. You started at 500,000, you lower it a couple times, you get to 450, and then you sell at 445 or 440. So that's your sold price. So anyways, original versus sold price. And this is not per house. This is the metro. But generally, you're going to get sellers be a little more optimistic, a little more aggressive with their list price in the spring. They feel good. They want to take a shot. I call it, aspirational pricing. It doesn't mean it's the right price, but a lot of sellers want to kind of test a higher price, see if it works. And so that's where you see this big gap here. As you get into February, March, April, you see those prices up, but that's not where the buyers are. The buyers, they might be buying and they might pay a little more, but they're going to tend to stay more in line. And then as we get into the summer, that kind of, I don't want to call it a bubble, but you get kind of that aspirational pricing. It starts to get more realistic. So you start to see the list price and the sold prices get a little tighter. Sellers get a little smarter with their pricing because they realize they're not going to get those spring buyers. That little pop is gone. And you really got to get more in, and you need to sell your house. So, starting at the right price is critical, especially second half of the year. This is active versus sold listings. We just showed this to you. Last year, we peaked out around 15,800 homes in July. We're sitting at the end of June around 15,200. So it's coming down. All right, finally, let's talk about rates. What have they done this year? Well, right now, as we head into the middle of this year, this is going to be a volatile week. There's a lot of economic data coming out. There's kind of some mixed signals of what's happening in Iran. So, a lot can change even in 3 or 4 days. But right now, we're going to call it mid sixes. We're sitting around 6.5 on the 30-year fixed rate mortgage. Good buyers, good credit scores are probably going to really get quoted somewhere in the low sixes, most likely. But let's call it 6.5. But here's what's happened this year. Do you think rates have gone up or have rates come down? Rates, this is the full year right here, have actually gone up this year. And so, because remember, the Iran war didn't start until we got to, I think, March. And so anyways, we started the year around 6.2 and it dropped down to 6 and it dropped down again right before the Iran war to 5.99. That felt pretty good. So a good start to the year. Part of that data that's gotten these buyers out the door is we had, pretty good rates to start the year. And then of course the Iran war breaks out, it shoots up to 6.64 really quickly. And it's been pretty volatile since then, depending on the headlines. It's gone as high as 6.75. Now we're back to 6.5. And again, it's gone more volatile because of the oil prices, because of inflation, just kind of uncertainty in the bond market, lots of moving parts. But at the end of the day, 6.5 is probably better than we were the last 3 years where we were really testing that 7% level a lot. So I think rates are where they're going to be for the rest of the year, somewhere in the sixes, and ideally that's what we want, because if it goes up to 7, that's not good news. If it drops to 5, there's probably some heavier uncertainty in the economy, and we don't really want that either. So I think if you see rates kind of stay in the sixes, it's not so bad. So prepare for that. I hope this is helpful. If you are a seller right now, really, as I showed you, May is where we peaked out on demand. That's how many buyers go write contracts. Every month moving forward, we're going to see contracts soften up a little bit. That just means there's fewer buyers out per month hunting and writing offers. So we need to be very consistent and dialed in with the activity that we're getting in the market and with our price, because price is our biggest piece of marketing to get buyers in the door. If you're a buyer right now, that is good news for you, right? You have a little less competition, and yet you still have enough supply out there to really go hunting. Supply hasn't changed that much compared to last year. It's a little lower, but there's still plenty to look at, and we're well above the 10-year average on supply. So kind of good opportunities for both parties there. If you want to follow our videos each and every week, make sure to go to our YouTube channel at Ryan Kelly Group. Click that subscribe button. Would love to have you follow along. And of course, if you know anybody looking to buy, sell, invest, or finance as we head into the second half of 2026, hey, now's a great time. Would love the opportunity to chat with you. Well, I hope you all have some great July 4th plans. Let's celebrate the 250th year of America, and I'll bring you more data in July. Thanks.